Let's get to the real. Thank you, Mika. President Trump's post on social media yesterday morning about Iran, the one we've been talking about all morning, had a major impact on the markets before the opening bell. It also came after some unusual activity in futures trading. CNBC notes there was a sharp and isolated jump in volume for the S&P futures and oil futures at about 6:50 a.m., breaking from what was an otherwise subdued pre-market session. About 15 minutes later, President Trump posted on Truth Social that the U.S. and Iran had held talks and that he was delaying planned strikes on Iranian power plants and energy infrastructure. That announcement sparked an instant rally in risk, with S&P 500 futures soaring more than 2.5% before the opening bell, while West Texas Intermediate futures dropped nearly 6% after the post. That's oil. Fortune magazine put it this way, quote, "In the time it takes to walk from your car to your desk, President Trump added $1.7 trillion to stocks and pushed the price of oil down by $17, or approximately 15%. By the time you got your coffee, Iran had reportedly called him a liar, and half of those gains vanished."
You remember in Wall Street, Hal Holbrook's character going, "Bud, don't, do it. Just don't. You're going to get in trouble." I'm going to be that old guy right now. There are a lot of stupid people that are thinking, oh, you know what? We're in the Wild West. We can trade on inside information. This will never catch up to us. We'll make a quick buck. I'm Hal Holbrook. Don't do it, Bud, because there's no free lunch. If they don't get you now, they're going to get you sometime, right? There are a lot of stupid people that are trading on inside information right now that are going to get in trouble down the road because everything's public. They're going to find out who got inside information. They're going to find out who made a quick buck, and it's just not worth it.
They may feel protected today. Right. People in charge today will not be tomorrow. Let's bring in former Treasury official, Morning Joe economic analyst Steve Rattner. He's got charts on how the war with Iran is impacting the economy and perhaps the other way around. So, Steve, before you get into your charts, just your take on what you heard there about that futures trading yesterday.
Yeah, look, as there's a lot of stuff that goes on Wall Street that is not, shall we say, fully compliant. And now you have an administration that doesn't seem to have any real guardrails around what I'll call corruption. And if you end up getting caught, and Joe's certainly right, you shouldn't try, maybe the president will pardon you. So none of this is totally surprising in the current environment in Washington.
That folds into your first chart. Trump accedes to the market. So yesterday morning, a little after, just over 24 hours ago now, he puts out that statement that we're negotiating with Iran and takes a little pressure off the markets.
Yeah, so there's been a lot of speculation about why Trump did what he did. Let me give you a theory from the market's point of view, and we all know that Trump is highly responsive to the market. So the S&P was sort of tottering along most of this year, not doing terribly much. The war starts, and the S&P drops 4.3%, but it drops 3.1% just in the last week. And we all know that Trump is very sensitive to the market. But then he put out that tweet on Saturday night about increasing the bombing of energy infrastructure and utility power plants and so on. And so on Sunday night, which is when markets in Asia open our time, the Asian markets rolled over, and they were down about 3.5%. 3.5%, just to put that in Dow Jones terminology, is 1,600 points. Obviously a major, major drop. So Trump wakes up in the morning, and that's what he's greeted by. And then what he's also greeted by is what's happening in Treasury yields. So roughly, I just picked 5:50 in the morning was sort of this low point. Traders on the East Coast are starting to wake up. 10-year Treasury yields, which Trump is very sensitive to. You remember on Liberation Day, or after Liberation Day, when the bond market rolled over, and then he quickly paused the tariffs because rates were going up. So rates start going up pretty sharply because of what happened in Asia and what he had said on Saturday night. And then, lo and behold, Trump delays the strike. Rates go all the way back down here. Then the Iranians deny things are happening, and they go part way up here. And then they bounce around all day as everybody's trying to figure out what's going on. So it really does look like Trump was in pretty much of a hurry at 7 o'clock Monday morning when he did his 180 here because of what was happening in the bond market.
So, Steve, are the oil markets just waiting for the Strait of Hormuz to open up, or maybe longer term for this war to end before they stabilize?
Yeah, definitely oil prices are not going to really stabilize at lower levels until the Straits of Hormuz open. Why don't we go to my third chart? Maybe we can go back to this one later. But so what's happening with gasoline? So gasoline has jumped up enormously, as everybody knows. It's almost $6 a gallon in California, and even in some of the western states, southwestern states, where prices are still relatively low, they've taken a big jump. And so this is a curve of oil futures, and you can see this is where oil was before the war started. This is where oil got to before Trump did his 180 on Monday morning, and it settled back here. But the important point here is, yes, oil is a heck of a lot higher than it was, but traders at least believe that even if the war ends, oil is going to stay materially higher than it was before. This is about $10 a barrel. There's 2.5 cents per barrel in terms of the cost, so say 25 cents on gasoline, staying higher for longer. Because of what the damage that's been done in the Middle East to the infrastructure and to the oil facilities. And so this is another reason why Trump is trying hard to get it over with.
All right, now you can moonwalk back to your second chart. The Fed outlook worsens. What are you looking at there?
You know, I'm trying to be flexible here so we can move around however you want. But yes, so in terms of other things that are worrying Trump is inflation. And the Federal Reserve put out some projections last week. They had been previously projecting 2.4% inflation by the end of this year. They raised it up to 2.7%. And this is because of oil and energy costs feeding through the economy. You've seen airline fares go up. You see a lot of other talk of other prices going up. Diesel fuel's $5 a gallon, really affects the trucking industry. And so that has implications for interest rates, too. Before the conflict began, the market was assuming that interest rates would come down by 0.5 percentage point in the course of the year. And as you know, Trump has been banging the drum really hard to get interest rates down. He believes our interest rates are way too high and they should be much, much lower. That's what real estate guys typically think. Then the war begins and the market sees the inflation starting to creep in, and it says, well, we don't think interest rates are going to go down so fast. And so by the time Trump acted, the market was actually pricing in a slight increase in interest rates by the end of the year. Then Trump acts and it moves down a little bit, but still pretty pessimistic about the prospect that interest rates are going to come down any further from where they are now. So this is another reason why Trump is really eager to get this war over with.
So, Steve, we always, every time you come up here, we ask you about your time in this building, the old New York Times building, where so much history was made. What years were you here?
I was here in 1975 and 1976 and a piece of 1977.
77. And then you started, did you start going overseas and going to different bureaus?
No, then I went from there to Washington and ended up as the chief Washington economic correspondent during the late 70s when, obviously, as you recall, we had crazy interest rates, crazy inflation, crazy energy prices, all that stuff. In fact, in 1979, we had one of our energy crises. And so I covered the well, I don't know if I can call it even the rise, but certainly the fall of the Jimmy Carter administration, and just watched it for 4 years deteriorate, as they really were the gang that couldn't shoot straight, however capable some of their advisors, like
other than national security advisors, the big new Brzezinski. When Paul Volcker was chosen by Jimmy Carter to be the Fed chief, did Jimmy Carter know that Volcker would do whatever it took, including taking interest rates up to what, 21%?
Yeah.
Was there an understanding in Washington at the time that Carter was doing something that would knock inflation down but might end his presidency?
I think he certainly was hoping for the former, and he certainly knew that Volcker was going to administer pretty tough medicine. Whether he thought it was going to be as tough as it ended up being, I don't know. But Volcker, but remember, G. William Miller had been the head of the Fed right before that, and that had not gone well. The Fed really wasn't responding to the inflation, and so it was just becoming a downward spiral for the Carter administration. And so Volcker was their hope, and he did what he had to do. And fortunately for Reagan, when Reagan came in, he had 4 years for Volcker to get this under control and for him to get reelected, so he could take the pain in a way that Carter couldn't, because it came right up against his election in 1980.
So where would you guys go down to the Washington Bureau in 1979, 1980 after doing your work? Like what? You talked about what bar you'd go to here. Where do you guys go to have a drink down in Washington?
Well, Washington was a little less rowdy maybe than New York, but there was an old place called Duke Zebert's just down the street from the Bureau in Washington. It had been there for like 50 years. And so so that's where we went to hang out. And it's long gone, unfortunately, because it was a fun place.
All right. Well, when Steve Rattner returns, we're going to talk more about the history of this building, and also going to ask him about he's like he's our Forrest Gump because he was where he needed to be in 78, 79, amazing. And then he went to London and bureau chief that covered Margaret Thatcher.
Okay, Morning Joe, economic analyst Steve Ratner. Thank you.
Living history.
We can have a segment.
Steve Ratner.
Chatting with Ratner. All right.
There you go.
Still ahead on